Hi, it's Jonathan from Vanilla. In this video I'm going to explain 3 ways of dealing with the loan charge. So the first option, if you're a homeowner, you currently have equity in the property as well as a mortgage, is to release further equity and pay the loan charge in full. The way that works is we'd apply for what's known as a second charge. So technically it's a second mortgage which sits on top of your current mortgage. That mortgage can be taken on interest only. It has no early repayment charges, which is great because later on we can consolidate both loans into one nice neat payment for you. The lump sum would come out as cash, you then pay HMRC, loan charge disappears. Option number 2 is very similar to option number 1, so we follow exactly the same process. We'd apply for what's known as a second charge. Second charge then releases cash into your bank account. The cash can then be transferred over to an investment property. In other words, you use the equity within your home to purchase an investment property. That property then generates an income. That income you then use to repay HMRC on some sort of payment plan. Now, there's 2 structures that we can look at in detail. One, you can use that equity to purchase a property just in your name, in your personal name. The other route is to use the equity to purchase the property in a limited company's name. Now, one's going to be more tax advantageous than the other. Option number 3, if you have a limited company and you have retained profit within that company, you can loan that money to a second limited company. The beauty of doing that is, number 1, there's no tax on it. Second of all, you use that money which is in the new limited company to purchase a property. The property then generates an income from that equity. The income can then be used to pay HMRC. So in summary, there are 3 options. Option number 1, release equity via a second charge. You then use that equity to repay HMRC in full. Option number 2, similar to option number 1, but instead of repaying HMRC in full, you invest your equity in a property. The property then generates an income. The income you then use to pay HMRC. And then finally, if you have retained profits within your limited company, you can use those profits to purchase properties in another limited company. Income from that can then be used to repay HMRC. So I hope this video has helped. There are obviously lending solutions out there. If you've unfortunately been hit with the 2019 loan charge, please do get in touch if you want to discuss this in a lot more detail based on your personal situation. Thanks for watching.